Okay, so today is 22nd May 2024, and in the morning I was trading Indian stock market, and the stock name is NTPC. So in the previous day we see that price is here and it is coming from this swing low, and this swing low is coming from this order block. This is a good order block because we had inefficiencies here, and so therefore we are bullish up to this drawn liquidity. So based on that, today we were trading in the 3 minutes chart. So this was the reaction. So we can see here that there is a gap which is very similar to fair value gap. Actually there is no such difference. Gap and fair value gap both are doing the same purpose. So first it creates this first gap, we can call it FVG1, and then after taking the previous day high, this blue line, it creates a second fair value gap, right? So based on that, we were bullish from here. So just from the beginning of this fair value gap, keeping our stop loss below this low, we are bullish somewhere around our target drawn liquidity here. But as you can see here, we encountered stop loss, and before that, if you study the previous day situation, so this was an order block 15 minutes time frame created in the previous day, and price has actually tried to trade in this order block but actually failed to trade. So when we were marking previous day, so our target area was this. From here we should take a long trade, but now since in the morning price actually did not come here, so we took this trade based on the 2 FVG formation, and so as you can see we encountered a stop loss. So this is the thing I repeatedly telling here, that the market condition is not suitable for intraday right now. Why? Because you can see here, if you just see the indiavix chart, this is the indiavix chart. So many of us actually think that when indiavix goes up, Nifty should come down, and vice versa, like Nifty, indiavix going down means Nifty should go up, and something like that. But in my opinion, this is not a correct understanding of the market. Actually indiavix itself is the measure of volatility of the market. It is not something inversely related to Nifty. That means this is going up means Nifty should go down, nothing like that. It only means that when indiavix is surging up like this, the volatility in the market or the movement of the price from high to low will be too erratic in that way. So you want to check this, you just compare this with Nifty here, just plot Nifty for comparison. Maybe you give it a new pin here. So what do you see here? Just use this portion of the chart, this portion of the chart. So okay, I can see here from this point to this point, indiavix was going up and Nifty is going down. So okay, then but what happens here? Here also indiavix is going up, but then Nifty is also going up. So what is happening? So therefore there is no such correlation that indiavix and Nifty should be inversely related. What is more important is when India VIX is going in upward direction and you are trying to do intraday trades, then you will encounter stop losses frequently. So you see here, this was the first stop loss. Okay, then you may think that okay, maybe price is coming in this order block from here, it will be bullish, so let us take a short trade from here, sell short. So maybe you will take this fair value gap as your entry, keeping your stop loss here and your target up to this order block. See, so like price taps into this bearish fair value gap and then again he stop loss. So then you may be thinking, okay, now it has shown its true color, it is going again in bullish direction, so let me take long trade from here, from maybe from this order block or maybe from this fair value gap, keeping our stop loss below this low and up to this. So again you will encounter stop loss. So this will happen again and again. So either you can do one thing is, so what we can do is we can only keep a huge stop loss, like this type of thing we can do below this order block and keeping our target smaller, which is a very stupid thing to do, I know, but just an opinion. Sometimes people do these things. So then so what should we do actually in these cases? So my suggestion, again I am telling, this is a quick disclaimer that you don't have to agree with my suggestion or my understanding of the market. You can have your own understanding which can be better than me, but I am just sharing this based on my experience. So what to do is, first of all, do not trade. I think this is the best solution in my opinion. Do not trade. So you do not trade, you do not lose money. That is the best thing you can do. But some of us like me have addiction of doing intraday every day. So for them, the second point is reduce your risk per trade. So for example, if you are trading normally 1% loss per trade, then reduce down it to 0.5%. 0.5%. If you are trading to 0.5% of loss per trade regularly, then reduce it to 0.25%, something like that. Then reduce your reward to risk ratio. So for example, I normally trade 2.5:1. So in this type of market condition, it is very difficult to expect 2.5:1. So maximum 1.5:1 or maybe 1:1 also. Then fourth point is buy from the deepest discount, sell from the deepest premium. So here, what is the deepest discount? So we have already marked this fair value gap, order block here. So just take an oath that when price comes here and gives market structure shift or shows any kind of bullish intention, then only we will take trade. We will not take any trade in between from here to here. You can see, so draw flip from here to here, this high, from this low to this high. This is the deepest discount possible. So we will only buy only when price is coming here, not before that. So if you do that, then also to some extent you are protected. And for selling also, this is the mirror image of this will be selling. And so try low beta stocks. So these stocks having lower correlation with the Nifty. So when Nifty is moving high or in a faster rate, these low beta stocks will move in a slower rate. So you can try low beta stocks for intraday for those periods. And so what is the best range for this India VIX? So in my opinion, the best range is 12 to 15. When your India VIX values are coming in this range 12 to 15, then your strategy will work. So what does that mean? Your strategy will work. Does that mean it will be giving you 100% accuracy? No. What I mean to say is, for example, you have a strategy here, strategy 1. Suppose it has a 60% win rate. So in this range from 12 to 15, in my opinion, you may have your own opinion. So in this range, if you have a already backtested strategy which is giving you 60% win rate, then in this range only you can expect that 60% win rate you will get. Once it goes beyond this level, so from 15 to 19, so here this your 60% win rate will drop. So drop by how much I don't know, but it will drop. It will be something like 50% or 40%, something like that. So you have to be extremely careful while trading intraday in this when India VIX is in this zone, and beyond 20 actually you should not trade, like in this scenario. For a beginner trader or a upcoming trader who is learning, it is more advisable that one should not take any trade intraday on an intraday basis when the India VIX value is more than 21. So that's it for now. I just explained the scenario today, how I encountered the stop loss here, and what is the problem in the stock, and what is going on in the market regarding India VIX and comparison with Nifty. And then I have given you certain suggestions how to deal with this situation. So this is based on my experience and my knowledge. You may or may not agree with this, and that's it. So hope you have understood this content, and please give your feedback on this using the comment section, whether you agree or disagree or whatever. And that's it. So thank you for listening. Let us meet tomorrow.